Finance Minister Enoch Godongwana has presented South Africa's national budget and has proposed a value-added tax hike. VAT is set to increase by 0.5 percentage points from the 1st of May. And another 0.5 percentage point increase has been penciled in for next year. This is the first time that VAT has been raised since 2018. But the hike isn't as big as Treasury had initially planned. The Finance Ministry wanted to propose a 2 percentage point increase in its initial budget, which should have been presented last month. But the proposal caused an impasse in the Government of National Unity, which caused the budget announcement to be delayed until today. And it seems there could still be division on the matter. Democratic Alliance leader John Steenhuisen took to X just minutes before the budget was announced to say that the DA will not support the budget in its current form. This is the first time in 3 decades a finance minister is tabling a budget in Parliament without certainty over it being eventually passed.
To raise the revenue needed, the government proposes to increase the VAT rate by 0.5 percentage point in 25-26 and by another 0.5 percentage point in the following year. This will bring the VAT rate to 16% by 26-27. Should the spending reviews and other measures we're embarking on yield enough extra revenue, we will reassess the need to embark on the second 0.5 percentage point increase to VAT.
In company news, Metis lenders have in principle agreed to refinance the automotive components and battery makers' current gross debt obligation that amounts to about 4 billion rand. And the majority of it is short-term. This should give the company a more sustainable debt structure. Sirius Real Estate has set its sights on growth. The firm will acquire Shallcroft Business Park and an adjoining piece of development land with outline planning permission. That's for the tidy sum of £40.5 million. CEO Andrew Coombs says the transaction adds a strong income-generating asset to the group's portfolio. It also creates potential for further value creation. And Growthpoint Properties has grown its distributable income at 3.9% at the halfway stage of the financial year. That's mainly due to an improved contribution from its South African operations. That unit benefited from like-for-like rental growth, lower negative rent reversions and reduced vacancies in the logistics and industrial sector, as well as improved expense efficiencies and recoveries.